we also love to invest in like a diverse real estate portfolio. So to your point, like investing in asset classes that are non-correlated, where one is going to have challenges, the other might be doing really, really well. And I think that makes a lot of sense. How should investors, like, obviously every investor's got a different scenario, they're at a different point in their journey. But when you think about portfolio allocation for, let's just say like the threshold for being an accredited investor is $1 million in net worth outside of your primary residence. So let's just take that threshold. Like for someone who's just at that threshold, what do you think like a portfolio allocation to crypto might look like? Generally speaking, a range perhaps.
That's a really important thing to be thinking through on an individual basis. I can give you some ranges. This is not going to be, it's not financial advice. Talk with your tax guy, your legal lady, all of that good stuff, right? But broadly speaking, there's a pretty strong consensus on the range. So if you look at analyses along the lines of modern portfolio theory, which you can say one thing or another about, but it's been a useful benchmark for quite some time now. Or if you look at surveys of institutional investors, family offices, ultra high net worth individuals, generally you're seeing a preference for people to be allocating somewhere between 3 to 10% of their overall assets into crypto. And that can be outside of that, it could be lower, it could be higher. But if we settle for sake of argument on somewhere around the 5% range, that can it can do a lot of heavy lifting with a fairly minimal amount of risk, where as an emerging asset class, there have been years where crypto has returned hundreds of percent, or if not thousands of percent, right? And so if a 5% portion of your portfolio is allocated into something with that strong potential, you could be looking at a situation where your overall net worth can go up quite significantly, 10, 20, 30%, right? But by the same token, if it's in a down year, you're still looking at probably holding, maintaining the value of 95 to, 99% of your net worth. So that's part of the reason for a strategy like that.